Good morning and welcome to First Mover, your first global look at today's action in Bitcoin, blockchain, and digital assets. I'm Jen Sanasi along with my co-host, the Thai Director of Content, Lawrence Lewitton. Let's take a look at what's going on in the market, starting with Bitcoin. The CoinDesk Bitcoin price XBX index is at 25,543, up over 2%. You'll see Bitcoin's price pumped on that BlackRock rumor and then soared again when it was announced that BlackRock has filed for a Bitcoin spot ETF. Let's take a look at how Ether reacted to the news. The CoinDesk Ether price ETX index is at 1,665, up almost 2%, following the same trend as Bitcoin and DeFi assets. CoinDesk's DFX is at 91.55, up about 1.5%. Everything is in the green this morning. Lawrence, good to see you.
Good seeing you.
Lots of news this morning. We got BlackRock, which I just mentioned, the world's biggest asset manager, filed for a spot Bitcoin ETF with Coinbase as crypto custodian.
That's the best part.
That is the best part.
I think that's
right?
one of the funniest parts because obviously right now the SEC has a case against Coinbase for a whole bunch of reasons, including not being registered, as a securities dealer, and of course the custodian business slightly different, but nonetheless it's I think it was an issue with the SEC and things like that. But it does make it kind of interesting that they as BlackRock files, BlackRock, of course, the largest asset manager in the world, they got trillions, not billions, trillions in assets. And that makes it a formidable, filer. It's not just some, crypto, native organization doing this. This is iShares, which is a subsidiary of BlackRock. So that makes it more potent, but it'll be interesting to see what the SEC. I have a guess what the SEC will say. It'll probably be a firm no, but it'll be nonetheless. Now you have a real business here that wants to get in on it. So I don't know.
I was going to say, it feels like we're in the bull market again. We're talking about ETFs. We're going to talk about $1 million NFTs later. Feels like the news is picking up. Well, some are saying that this news is a positive development for regulatory approval, Lawrence. But on the other hand, we have Binance that is facing more regulatory upheaval. The exchange is under investigation in France for the illegal provision of digital asset services and acts of aggravated money laundering.
Aggravated money laundering.
Aggravated.
Really angry. Yeah, really aggravated. And they also had I think they're skipping out of the Netherlands. So this is and also an interesting thing. This is, of course, speaking of crypto native entities that are involved and coming up against regulators. They seem to have problems everywhere they are right now. It's not exactly the greatest thing. I mean, earlier in the week, basically we have Binance US saying that, they were going to have issues with fiat. And you also saw kind of a big sell-off as well on the alts in part, as all this is going on. And not a good, it's got to make the folks at Binance sweat a little with all the things that are happening to them right now. I think a lot of these crypto companies have been operating with the idea that they are above the law, or they're creating new law, or code is law and things like that. No, law is law. And, these countries have armed armies and lawyers, and a lot of these crypto companies do not. They're not BlackRock, though.
That's true. They're not BlackRock. It feels a little bit like a regulatory domino effect. When one regulator goes after them, other regulators say, "Hey, Binance is here too." I wonder if that's going on here. I think it's worth noting that recently Binance also laid off a handful of employees, citing all of the litigation that's happening with.
They weren't all lawyers, though. I don't think the people that were laid off at Binance were the lawyers. No, those guys have a solid job for a while.
All right, let's get to our first guest, crypto. Sorry, I'm so like crypto focused. Cboe Digital has been awarded approval from the CFTC to offer margined Bitcoin and Ether futures contracts. Our first guest joining us now is Cboe Digital President John Palmer. John, welcome to the show.
Thanks for having me, Jenna Lawrence.
Thank you.
All right, well, let's get right into this. The first Bitcoin futures contracts were listed on Cboe in December of 2017, but were discontinued. Talk to us about bringing this back, especially in this regulatory atmosphere, and why now was the right time.
So we've been working on this since 22 with the CFTC, and we're really excited about the developments. And we've been working with the staff along this for the last 15 months. And as you mentioned, we saw the first futures contracts listed in 2017 and 2018. And since then, we've only seen, a small pool of liquidity really build in the U.S. derivative markets. And so we're really excited to be able to bring margin-based futures to the U.S. Industry in order to expand the liquidity pools, expand the abilities, and ultimately bring additional innovations to U.S. investors, where we're seeing similar practices being offered in the international derivatives markets.
What was the process of getting this approval? You know, we've heard several different firms try and get approval from the CFTC and the SEC. They run into some roadblocks. Talk to us about your process.
Yeah, our process really started with looking at what was existing in the industry. So our model is an intermediated model, as they refer to. So futures commission merchants are the only members of the clearinghouse able to offer and access the margin treatment on derivatives. And what that means is we've basically proposed a model that fits within the existing regulatory guidelines. And this is a model and a regulatory framework that's been in place for over 100 years. And we've seen it work. It's time tested. And so from our perspective, we said, this is already working. We want to work with all the partners in the industry that are already providing derivative access in commodities to their customers. And this is the right way to do it.
So explain a little bit about the structure of this contract versus what you had going before, because basically you had a contract that was 5 Bitcoin when you were the first to the market with it, but ultimately CME won that one out. So what makes it different here? What's the structure of this contract?
So we're actually going to be offering a few different contracts. We'll offer a financially settled contract, and we're looking to offer a physically settled contract. And all this is still pending some additional regulatory approvals. But the difference here is that the Cboe Digital platform is built integrated with both the spot and the derivatives platform. So participants are able to trade both spot and derivatives on the same tech. So some efficiencies for those folks doing those integrations and managing those tech platforms.
Well, I mean, in terms of size of contracts, you guys haven't figured that out yet, or are they minis? Are they what would bring in the liquidity that you guys didn't have before?
Yeah, I think you're going to see us list something that sits in between what the industry kind of has out there today. So there's nanos that are really small. You have the micros at the CME. You have the big kind of the regular contract at the CME, which is 5 Bitcoin. So there's a big spread, call it between 1/100th of a Bitcoin to 5 Bitcoin. We're going to be in the middle of that. I think you'll see a cash settled future that's a little bit smaller in size, a little bit has a better appetite for retail investors, and then we'll have a larger physically based contract that's more focused to institutional players.
And you talked about getting through to this with the CFTC and working with the CFTC. Of course, they're more crypto friendly than the SEC. You had the SEC come down on I think I counted, was it like 9, 10? It was a bunch of currencies that were deemed to be securities all of a sudden. Does that thwart any future plans for the CBOE? And I have to remember to say CBOE. I'm an old school guy, CBOE. You guys are just CBOE? Is everyone CBOE now? Is it just Cboe Digital and CBOE is your parent company? How does this work?
Yeah, so we're CBOE, or Cboe Global Markets. So after we acquired BATS in 2017, we moved from CBOE to CBOE. To your point, you still remember everyone as CBOE, so that's okay. But definitely,
so I'm going to pronounce it Cabo. That's it.
As long as it's Cboe, that
I don't know
works
why
for me.
the BOE has to be lowercase.
People's work.
Hey,
Yeah.
we're here just building a global network of exchanges, so we're really excited about that. I think when we look at what's happening in the regulatory environment, it's kind of a little bit of a double-edged sword. Number one, we're seeing some clarity in the U.S. in the sense of what the SEC is starting to view as securities in these filings. So from our perspective, we see these lists of tokens, and we say, okay, well, we at least know that the SEC thinks these are securities. So if we wanted to trade those securities, we know what we need to potentially do to be able to offer those to our customers. There's obviously thousands of other tokens out there that we don't know. From Cboe Digital's perspective, we are not an arbiter of what is or isn't a security, what's a commodity, what's a and where it should be. Ultimately, what we're looking for is just clarity, call it a box, in which, from the federal perspective, from our regulators, that we can operate in and do so prudently, offering a trusted, transparent market to investors globally. And we operate 26 markets today across 18 different regulatory jurisdictions across Cboe, across a number of different asset classes. So, from our perspective, we want to work with all the regulators. We don't have a preference. It's just more of the clarity is the most important piece.
CBOE has been around for a really long time. Do you think that you've had a regulatory advantage in that respect because you've worked with regulators before? You're not a new crypto exchange that popped up on the block in the last 5-10 years. Do you think that gave you a regulatory advantage here?
I think it does play a little bit into an advantage for us. We've been in business for 50 years, working alongside our regulators very closely. So we've helped educate our regulators. We've worked with them time and time again as we want to innovate and bring new products to the market. And so we approach digital the same way. We want to work alongside our regulators and find a prudent way to continue to move the ecosystem forward. Regulation didn't start and end where it's at today in one day or 1 year or 1 decade. It took a while. So, seeing the progress that we're seeing is good. I think, I'm sure everyone would like it to be faster, but we have to remind ourselves that regulation is not easy. There are a lot of things that have to be considered, and there's a lot of folks that have to weigh in to find, a balance. And so from our perspective, we've approached it with an insight into thinking that the digital market will look very similar to some of the very other robust and liquid markets that we operate in the US and in Europe or even globally. And so from that perspective, we've taken a very prudent and conservative approach in the products we've offered, the tokens we've listed, and how we've grown. And I think as we see regulations shape up, a lot of companies will have to focus their efforts on how they fit their existing businesses in the new regulatory framework, where we'll be focusing on how we grow our business with the clarity in regulation.
It wasn't immediate approval, though, right? The CFTC asked for some updates. One of the things they asked for was more cybersecurity guardrails. Can you tell us about what they asked for there?
So yeah, some of the things that they asked for are, some clarity on our SOC reports. So Cboe Digital has a SOC Type 1, a SOC Type 2 certification. And so we also work with industry participants, call it custodians, digital custodians, that also have those types of security certifications. And I think that's really important because that shows customers that there are independent auditors coming in, checking processes and governance and procedures to make sure that everything is safe and you can trust what they're doing. And so I think, those are some of the things that the CFTC was looking for in terms of being able to see us working with and being prudent with the vendors that we work with, on top of making sure we have the same certifications internally. And then additional things like a little bit of extra risk management, call it cover 1 versus cover 2 versus cover 3 type of margin program. And that is at the designated or clearing organization, or DCO, at the CFTC. That's where all the derivatives contracts are cleared. That's the type of kind of risk modeling that the internal folks will use to determine margin and default financial resources funds and other things. And so we took, again, a very prudent approach, employing a cover 2 model, which is has additional risk safety than called a cover 1 model, which some DCOs are able to employ.
John, thank you very much for joining us this morning. It was a pleasure speaking to you.
Thank you very much for having me.
That was Cboe Digital President John Palmer. We're going to take a short break, and when we come back, we'll take a look at what's going on in the markets.
All right, folks, let's get deep into the crypto markets with Innovating Capital General Partner Anthony Georgiades. Welcome, Anthony. Welcome back, actually.
Great to be here.
Good seeing you again. Okay, so Bitcoin went past 25,000. It was below there, now above 25,700 or so. It had a little bit of a bump because of the iShares news that BlackRock was filing paperwork to start an ETF. Is the market just kind of like searching for any positive, anything that it could grab on? I mean, let's face it, these ETFs don't really do much for the price of Bitcoin, do they?
Well, depending on the type of product, right? A lot of the synthetics that we've seen in the market, historically speaking, haven't necessarily been spot settled. So, to your point, there hasn't actually been a dramatic impact on the actual price or demand for crypto. But with some of these newer products that are emerging that are spot and cash settled, they will actually have an impact on the price of Bitcoin. But, I think more generally speaking, to your broader point, the market seems to really be hanging on and grasping for any glimpse of positive news. There's obviously been a wave of uncertainty from the regulatory sphere over the last couple of weeks that's cast a large doubt in terms of the future of crypto. You've seen firms like Andreessen Horowitz deciding to move a lot of their onshore activities offshore. That's obviously spiked some fear and concern for US-based entities, US-based funds, and US-based projects. But I think right now you're seeing a bit more clarity with respect to monetary policy from the Fed this week. And, while there was a bit of good news with bad news in terms of, as the market expected, a pause in rate hikes, but there would be a continuation of rate hikes in the future. I think that the certainty of the news being delivered has given the market a little bit, not just crypto speaking, but broader equities and whatnot, some room for comfort in terms of we know what's happening and we can adequately price it in.
Yeah, yet it seems almost like there are two different conversations going on with when it comes to what the Fed is going to do. Because when I look at the bond market says the Fed is definitely going to raise rates a couple of more times, at least, or at least 50 basis points by the end of the year. And it's kind of reflecting somewhat what we see with the dot plots. When we look at the equity markets says the bond market, the equity markets are like, we're not buying this. The Fed they're done. This isn't the skip. It's a pause, and that's it. Nobody's the economy is just going to be so bad, and the Fed's going to wake up next month and go, oh my God, this is horrible. We can't raise rates again. So who's winning out here? Because it looked like crypto was kind of following the bond market for a while, and then all of a sudden, with the BlackRock news, it started to reflect more like the stock market. So, which is going to win out in the end?
Right. Just historically speaking, you're always better off positioning yourself in terms of the bond market. It's proven to be correct time and time again. At least over some of these uncertain predictions. Now, I do think one aspect of this that the equity market, is obviously potentially not pricing in enough rate hikes moving forward. The current pause is substantial because it's not necessarily always just the quote-unquote terminal rate that we're targeting or the velocity of rate hikes themselves, but really that accumulated weight of those rate increases over time. And because we have actually paused and have not hiked right now, that weight has potentially subsided a bit and provided some relaxation in some of those previous assumptions that the equity markets had, hence some of the rally that we've seen over the last few weeks. And frankly speaking, right now you've had obviously a lot of forced buyings. There's a ton of options that are expiring today. They call it kind of like the triple witching OPEX. And, effectively, we're going to probably see a rollover and a bit of of volatility in today's market. And the last point is people just seem to be a little bit underinvested at this point in time.
Or it could be the Fed just trying to give everyone a breather so that they could reposition their bond portfolio, because as I learned back in March, this isn't going well for a lot of these regional banks.
Mm-hmm. Yeah, that's definitely the case too. It's it's certainly a bit of destabilization that was induced by poor guidance from the Fed, stemming back to really November of 2021.
Let's talk about USDT. Yesterday, we saw USDT depeg, some data suggesting that traders are opting for other stable coins. Is there any cause for concern here?
There's always been, some opaqueness and this, gray cloud over USDT and its ability to support its peg over the long term. And I think more recently than anything, with respect to a lot of the both, not just regulatory uncertainty in the US, but the de-dollarization of the US itself, I think that a lot of both retail and institutional investors are seeking and demanding different forms of stable coins, but also moving potentially away from stable coins in and of themselves, and really actually viewing Bitcoin as that pure rebasement. We've actually for the first time had a handful of different investors of ours call us and figure out how to basically convert from both stable coins to Bitcoin and then move those Bitcoins into cold storage. And to get those types of calls from these types of investors, a few years ago I would say that would be completely unprecedented. But in today's environment, again with that uncertainty, that sort of gray cloud over the market, and a lot of this fear of both recessionary concerns and de-dollarization, nothing seems to be impossible at this point in time.
So you're saying that the investors are trusting Bitcoin over the stablecoin market?
In this particular scenario, they're tapping into the pure ethos and philosophical characteristics of Bitcoin itself, something that truly is sufficiently decentralized, that is absolutely permissionless money, and a true intrinsic store of value, nothing that can be manipulated from external entities, or where trust is still a factor. What is the true supply of UST? How backed is it? And do we even need to necessarily hold the value of the dollar if we're concerned about the underlying longevity of its value?
Well, speaking of losing its value, we had a whole bunch of altcoins get slammed because of these SEC lawsuits. There were several that were named specifically in both cases. I'm talking about the Maddox and Polygons, the Solanas of the world, and these aren't necessarily small little things. These are layer ones, pretty big layer ones, relatively speaking. Not as big as Ether, of course, not as big as Bitcoin. Nonetheless, these were the also-rans, the supposed ETH killers. That got named as securities. What does it mean ultimately for the alt market, for the altcoin market? Are we going to see them? Are we going to see Bitcoin and Ether's dominance gain in the long term at the expense of these smaller coins?
Well, I certainly think that that's very likely to be the case in the short term. We're seeing it already. You obviously saw a dramatic sell-off in altcoins, but very little volatility in the likes of Bitcoin and Ethereum, really for some of the reasons that you mentioned. And I think that until we get to the point, and unfortunately, this seems to really be again a case of regulation by enforcement, not necessarily clear-cut guidelines. And actually just last week as well, Congress has come out and basically guided that there needs to be some restructuring with the SEC, and that potentially the existing commissioner should not be running this entity any further, just given what's happened over the last few weeks and honestly last couple of years, the lack of clear-cut guidelines, and by just blacklisting a handful of utility coins as securities with no clear-cut guidance as to why. It's obviously going to cause a lot of both retail and institutional investors to reevaluate their holdings in these offerings. And of course, the exchanges as well. We saw forced selling from exchanges, forced selling from specific institutional funds. And I think we'll continue to see that until there's clear-cut guidance here.
Yeah, he would argue that he is giving clear-cut guidance, and that is everything's a security.
No.
All right, let's leave it on that note. Anthony, thank you very much for joining the show this morning. We hope you have a great weekend.
You as well. Thanks for having me.
Thank you.
That was Anthony Georgiades. Next up, the multi-million-dollar NFT that just sold at a Sotheby's auction. Stick around to see what it is.
$5.4 million. The bid is still with Kimberly, online in the room. It's now or never if you want to come in. $5.4 million with Kimberly Pearl on the phone. Are we all done? Fair warning, at $5.4 million, sold.
Sotheby's hosted Grails Part 2 yesterday, auctioning off more NFTs seized from bankrupt crypto hedge fund Three Arrows Capital in what is being touted as the largest ever live auction of digital art. Joining us now is Michael Bouhanna, Sotheby's head of digital art and NFTs. Michael, welcome back to the show.
Thank you. Thank you for having me.
All right, tell us about what happened last night. Generative artist Dmitri Cherniak's The Goose NFT sold for a hammer price of $5.4 million and a full price of $6.2 million. Were you surprised?
No, I think we knew that it was going to attract a lot of interest. We can't deny that there is a rebound of interest, especially for generative art, for many reasons. And when we bring so far, in the context also of the 3AC, these Grails sales series, every time we brought some very high quality works in the market, the demand was there. This is I don't think there will be an opportunity like this for any buyers to acquire such an important generative artwork. So I'm not surprised that it takes 2-3 bidders to go up to that numbers.
You know, the art was previously owned by 3AC co-founders Suzu and Kyle Davies. Do you think this had something to do in driving the price up? You know, the 3AC story is almost an infamous one in the crypto story, the crypto journey now. Do you think that had something to do with it?
I think it's part of the provenance, and it's on the blockchain. When you look at the provenance of this work, it's where you can retrace the 3AC history, also the Sotheby's Grail sale history, and the image, the video you just shown of the auction itself. It's also now part of the history of this work, and it's very important, especially with the works on the blockchain, where the provenance is undeniable and part of it.
So, of course, I assume you're somewhat following what's going on with regulators in the United States with the SEC, specifically deeming a lot of tokens to be securities. Sotheby's has been auctioning for centuries, doesn't seem to have a problem with the things it's selling to be called securities. But here we're looking at potentially NFTs, and there's a possibility that perhaps the SEC might one day deem those to be securities, the way it's behaving. Is there any concern at Sotheby's that you might be forced to be filed as a securities dealer?
I'm sorry. I'm really I'm focused on the art. I'm an contemporary art expert and selling digital art. I have a great team working with me around all these things, but I'm really focused in selling digital and generative art.
Michael, some in the industry, after we saw those big prices in 2021, said the days of these super expensive NFTs are behind us, and the future of NFTs are really in utility and not art NFTs. How would you respond to those critics?
I think NFTs may be misused sometimes, in the sense that we sold generative artworks, and generative art been there since the 1960s. It's always been impacted by the different innovation we've seen, especially of the tools that the artists could use in order to create generative artworks. The blockchain been definitely one of the biggest innovation for generative artists. It has brought this whole new generation of artists, and with it also a new generation of collectors. I think there is many different categories in NFTs, some that include utilities, some that are also different categories of art, with digital art, with PFPs, but they all have a very different use case, and especially with generative art and with the exhibition. We've done an exhibition in our headquarters at Sotheby's where many works were exhibited, and with digital art can be very challenging in displaying the works, but this time we had great feedbacks from traditional collectors, understanding the value of owning these works, and probably also to display them in their home and become a collector of digital art and generative art.
So you mentioned, of course, generative art being around for a while, and the first thought I had is Sol Lewitt, of course, with his instructions on how to produce his art, but it wasn't the actual art. It was just a list of instructions, and each place had to basically create it on its own if they wanted to show it. Do you see that as potentially going on, specifically this sort of pre-digital era? Generative art, but also even physical art. Are you finding any interest at all in turning those into either digital versions, or is there any? Are you working with some of these older copyrights, if you will, to then have them turned into more digital products?
Yes, I think the NFT also brought us to this very interesting use case in which a physical item can also be paired with a NFT and help with the transfer of ownership, or with many other services that with the NFTs could be easier, even for authentication. And this is something we look at. It's still very early on, this concept. We don't know exactly how it will look like, but for our business, we trade. We are the leading auction house in trading many objects, going from luxury, fine art, old masters. There are many components that could be there is many elements that could be enhanced by the use of the blockchain technology.
Michael, thanks for joining us this morning. It's always a pleasure having you on the show.
A pleasure. Thank you very much for having me.
That was Michael Bouhanna, Sotheby's head of digital art and NFTs.
The State of Crypto is presented by Tron, connecting the world to the power of cryptocurrency.
A draft law seen by CoinDesk gives new insight into plans for the digital euro, and it is set to be proposed by the European Commission later this month. Well, time to check in with CoinDesk regulation reporter Jack Schickler. Good morning, Jack.
Morning, afternoon in Europe.
Well, yeah, indeed. Almost ready for Friday. But before we get into your Friday vacation plans, nope. You got to tell us a little bit more about this draft law.
Oh, if you insist. Well, we know that the European Central Bank has been thinking about whether to issue its currency, the euro, in a digital form for several years now. And now lawmakers want to get in on the act. And what we've seen is a draft bill that is set to be published within a couple of weeks that sets out all the rules that would apply, the framework. So it's not saying you should issue a digital euro. It's not saying it's definitely going to happen, but it's saying if you do issue one, then this is what it needs to look like. And that means rules like privacy, lots of things the digital euro can't do. It can't give interest to its users. You can't charge people in shops for using it. You can't have people use it as a store of value, so kind of keeping enormously large holdings instead of a conventional savings account. Lots of restrictions on exactly how it's used. Lots of them kind of modeled on the kind of privacy and anti-money laundering rules you get with the use of cash.
But is the purpose to not have this, to not provide interest and to discourage hoarding of it in a way to protect the banking interests in the EU? In other words, like if it provides interest for people, there would be no interest. There would be no demand for banking because you had a central bank that's giving you interest. Or if you're hoarding, there's no interest. There's no incentive to put it in a bank because you don't need to. But so is this kind of like a compromise with the banking industry?
Yeah, basically. I mean, the European Central Bank does not want to disrupt the financial system as it exists. They're, big on the side of traditional finance. So for them, what they call disintermediation, which is getting rid of the conventional banking system, would be a bad thing. They say, well, who would lend money to the economy, to businesses, to households if you didn't have banking system? So they don't want to do anything that disrupts that role that banks have. And if you could keep all your money in digital euros sort of directly with the central bank, then why some people would say, well, why would I bother having a checking account with a commercial lender? So I've definitely heard some lawmakers say as well, you're under the bank lobbyist thumb in doing all this. Why not be a bit more creative? Why it's as though they're designing the digital euro so that it's designed not to be too much of a success, because then it would take away from the commercial banking system. And that's definitely giving some people pause over whether, this is worth pursuing at all.
Some of the discussion that's being had in the U.S. is how do we prevent bank runs if it's so quick and easy to take out a CBDC or a digital dollar? Any mention like that in this draft law?
Yeah, exactly. It's not written very clearly, but we already know the ECB is thinking of things like holding limits. So, for example, each person would only be allowed to store 3,000 euros. That's just a bit over $3,000 in the form of digital euros. So any other money you have would have to hold in a commercial bank account or in whatever other form you want, but not in digital euro. And that is precisely designed so that you can't move all of your money into the forms of digital euro. And in fact, this new law would like cast that into the statute book and say the ECB would be allowed to set this limit. And that's a bit similar. It's not just the US, the UK is also thinking of something similar. And they're thinking, how much access to digital pounds would people need in order for it to be a means of payment for your kind of day-to-day spending and when you go to the shops, but without it becoming a kind of alternative to a checking account or a savings account.
Jack, thank you very much for joining us this morning for us, this afternoon for you. I hope you can go and enjoy your weekend now.
I will do my best.
That was CoinDesk regulation reporter Jack Schickler. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com. That's it for First Mover. We're going to go off. We're going to have a little bit of a long weekend. We're going to be dark on Monday for Juneteenth. So, Lawrence, we will see you on Tuesday. I'm Jen Sanasi. Thanks, Lawrence, for being here with me this week.
It's a meaningful holiday to everybody, please.
First Mover returns on Tuesday at 9 a.m. Eastern Time. In the meantime, you can catch the hash today at noon. You're watching CoinDesk TV.